This is Bloomberg Crypto, a daily Bloomberg iHeart podcast, and I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Tuesday, November 8th. One of the bigger fights in crypto right now is over the definition of a security. What counts as a security, who gets to decide what counts, and of course, who gets to regulate once that decision is made. This isn't just about semantics. The answer to these questions affects trillions of dollars of assets in the United States, including and increasingly crypto. In December 2020, the SEC accused Ripple Labs, the issuers of the Ripple token, of having conducted, quote, an unregistered, ongoing digital asset securities offering, an offering that raised $1.3 billion. Ripple, of course, did not agree with the SEC's assessment, and that fight is still ongoing. Most recently, Ripple asked the court involved to dismiss the SEC's complaint entirely, among other things, on the basis that its token, XRP, does not count as a security. So, who's right? And what are the consequences either way? Here to explain are Bloomberg reporters Matt Robinson and Chris Dolmetsch, and attorney at law Liz Davis.
Hey listeners, I'm Dusta Wonderad from the Bloomberg Crypto Podcast team. The U.S. Securities and Exchange Commission has won a case that could impact another case we mentioned in today's show, involving Ripple Labs. A U.S. district court has ruled that the company in question, Library, was selling its token as an unregistered security. In a response on Twitter, Library said that it's not giving up, so the ruling could be appealed. We recorded this show before the news broke, which is why it is not mentioned. For more information about the Library decision, go on over to Bloomberg Law. Now, back to our show.
Matt, Liz, welcome to the show. We don't often get to talk about Florida on this show, but today we're going to get to talk about Florida. And the reason that we're going to talk about Florida is because of this dude who was not exactly an international man of mystery, but certainly quite a character, a citrus farmer, a person who attempted to run for Florida governor named William John Howey. He died in 1938, and yet we invoke his name when we're talking about assets in 2022. Matt, why is this?
Well, Bill Howey, yeah, as you said, he got to Florida around 1910. Prior to that, he was an interesting guy who sold life insurance at 16. He actually developed land in Oklahoma tied to railroads. He also started a Howey car. I think it sold about 7 of them. So that didn't last. And then he found his way to Florida around the 1910s, started buying up land, planting citrus groves and starting building that out. The way he funded that, in part, was by bringing these rich investors from the north. He'd kind of schmooze them at his hotels, show them these orange groves. He became very wealthy. His mansion is still there. It's a national historic place. You can also get married there, I think, if you'd like.
But why do crypto people care about him?
So part of the way he made his wealth was the way he funded this orange grove business. So the idea is that he would say, hey, I'm going to sell you this land, but part of that is I'm going to develop it for you. Mm-hmm. So you give me money now, and then, I'll develop, I'll sell it, and then you'll get a return on that investment. Now it starts to sound more like, a security, something that like you give someone money and then there's an expectation that you're going to get some profit back. So he did this for years, and then the SEC sued him saying, well, that's our universe, that's our world. You should be registered with us. Goes all the way up to the Supreme Court, and that decision in 1946 goes through, sort of these steps to say, okay, when does this exchange of money become a security?
And Liz, it's 1946. Now we're in 2022. Why are both U.S. regulators and crypto lawyers of all stripes still fighting about this today?
The Howey test is sort of the standard that the SEC looks to in determining whether something constitutes an investment contract And if it's an investment contract, then it needs to be registered with the SEC as a security. So generally speaking, like all securities like stocks, bonds, investment contracts that are offered in the United States must be registered with the SEC, subject to some exceptions. Registration with the SEC is to make sure that it's for investor protection, right? To make sure that investors are sold investments that include all of the appropriate disclosures and are subject to regulatory scrutiny to protect investors. So as Matt discussed, the Howey test is sort of the standard test for determining whether an offering is an investment contract and therefore a security that needs to be registered. And there are just sort of parallels that the crypto industry is looking at in terms of the initial coin offerings, how they were being offered to the wide audience, the wide public, who are the investors. And the parallels are being drawn from there to see whether, those offerings and those initial coin offerings or for a blockchain project, the fundraising that's done there constitutes an investment contract that would fit under Howey.
When you say registering with the SEC, do you just send a postcard to the regulators and you're like, I'm going to do a thing? What does that mean in practice?
Sure. No, registration means, you have to fill out the requisite forms. There are a lot of disclosures that need to be made to the SEC. And so it is a lengthy process, but one that the SEC, would expect folks who are offering investment contracts, whether they are orange groves, interest in orange groves, or cryptocurrency, for them to comply with.
Now, that all sounds, you could argue, reasonable. It might be work, it might be expensive, lawyers are going to get paid. Why then do people object to having their thing be considered a security for the purposes of the Howey test?
I think because it's a facts and circumstances test, right?
When you say facts and circumstances, what does that mean?
It depends on how the token was being offered, what the situation was, the context in which it was distributed to the public and being made available to the public. And I think it depends on who the promoter was or the entity was that was offering to it, what disclosures they made, what comments did they make with respect to the prongs of the Howey test. Was there an expectation of profit that was being made known to those potential purchasers that were going to invest in the security?
And Matt, why is this such a big deal right now?
It's such a big deal because once something's registered, there's a lot of other things that need to take place. If you're selling a security and it trades on an exchange, that exchange needs to be traded, right? And then if it's a security, how do you protect inside information so that your employees don't trade against it? So there's just it opens up a whole bunch of different regulatory hoops people need to jump through. And I think part of the reason there's been reluctance in the industry is that the whole ethos is to, we're against institutions. We're trying to, do things ourselves and not to have some sort of intermediary. So this law or this test from, the 40s has kind of hampered it because the way that it was written is to sort of encompass a lot of things so that the investing public has someone, overlooking things to make sure that people are doing the things that say they're going to do.
Is there anything to the criticism that, these sorts of registration steps can hamper activity in some way? Have there been examples in other assets of concern about the applicability of these sorts of tests?
So, yeah, I think if you look, I used to be at the CFTC and, foreign currency, Forex was sort of the tool of choice, we used to say over there in terms of fraud, right? It was just another method in which folks who wanted to defraud people out of their money was being used. And, there was provisions added pursuant to Dodd-Frank that gave the CFTC jurisdiction over certain leveraged and financed margins transactions for retail spot Forex. And so, that's a similar parallel if you want to look at that. The concern from the regulators is that there are bad actors that are out there, right? And I think it's fair to say that a lot of folks in the crypto industry recognize there are bad actors out there and they don't want them, in the industry because it's giving them a bad name. Right. But unfortunately, because we're in this period of regulation by enforcement where we don't have regulatory clarity, a lot of the laws are being made based upon, the fraud that's out there with crypto being used as that vehicle.
Liz, just as a sort of a final question, obviously, the question of does the Howey test apply is very large and very complicated. But are there any other kind of similar questions that folks are encountering as they try to fit crypto into existing regulatory models?
Sure. I mean, I think right now, because we don't have a central, regulator that oversees all the financial markets and the banking systems like some other countries do, one of the biggest questions that we're seeing is, is it a security under the SEC's purview or is it a commodity under the CFTC's purview? Hopefully some of the legislation that's pending right now, the bipartisan legislation that's pending, might get to, drawing some lines between the two of that. But in my mind, in addition to the Howey test, I think a common question that we see all the time is just like, is this a security or is this a commodity? Or, how do I structure my project such that I fall within the jurisdiction of the CFTC as opposed to the SEC or vice versa?
Got it. Well, thank you both. Really appreciate you taking the time.
Thank you.
Coming up, we'll be talking to Bloomberg reporter Chris Dolmetsch on how one crypto firm is fighting the SEC. It's the SEC versus Ripple. We'll be right back. We just heard from Bloomberg reporter Matt Robinson and from attorney at law Elizabeth Davis. And now I'm happy to be able to introduce Bloomberg reporter Chris Dolmetsch on how one crypto firm is fighting the SEC. Chris, welcome to the show.
Thank you.
So when we talk about this SEC case, we're talking about the folks at Ripple Labs who are, I would not say, they're not super pleased with the SEC. What's this fight about?
So the fight's about whether they should have registered XRP as a security.
Their token.
Right, which would have obviously required them to put in a lot of registration materials, material information about their business for investors that investors can use to decide whether to invest or not. It's a common, obviously, practice among public companies and things like that who are obviously come under the purview of the SEC. But when it comes to crypto, they kind of feel, I think, not just Ripple, but I think a lot of these people, if you look at the BitMEX prosecution, I think you understand that they feel that they are not a traditional company that needs to abide by those rules, that crypto is really a commodity that can be traded freely and is determined by the market price rather than, the efforts of others.
How long has this fight been going on?
It's been going on since 2020, I believe. The lawsuit was filed in September 2020. It was one of the first big cases we saw from the SEC after the pandemic, because obviously that put a big crimp in the number of federal actions that were brought. The courthouse kind of shut down for an entire year. So I think one of the reasons this has taken so long to get to this point is because there's robust discovery. They've exchanged a lot of documents. There's been fights over documents. But the pandemic certainly hurt the pace of this case.
Why does Ripple maintain that they are not a security? Like, what is the specific argument they have been trying to make?
So they've been saying that XRP was created, but it's basically given away. It was given away to the community and therefore has no intrinsic security value. They say what they've received, yes, there's been XRP sales. We've sold tokens. We've given tokens to Ripple that have been distributed to the public. But they say we don't have, there's no central person that is making money off XRP.
One of the other big things about this particular case is there have been so few other examples like this. And so there is a lot of speculation that whatever happens, if Ripple prevails, if the SEC prevails, this could be potentially precedent setting for a lot of crypto. What would those precedents look like? Would it establish that, yes, certain types of things are or aren't a security? Just like in non-lawyer terms, what are people waiting to see?
There are a number of factors that go into whether or not something is a security. But in this case, and in most crypto cases, it really depends on the individual currency itself or the crypto or whatever the parameters of the individual token or the issuing or what have you. Beyond traditional securities and what we've had concepts of that, this could kind of expand that definition a little bit and make it more so that individual tokens could be considered securities in a broader sense. Just given what the framework surrounding them, it may not bring the hammer down on the entire industry,
Right.
but it could severely limit what they kind of do and increase their regulatory exposure. And it may not be entirely parallel, but I kind of look at this like if you look at the early days of the airlines, it was kind of the Wild West. People were flying, you could get on a plane, you might crash.
You could be smoking on a plane. It was wild.
Right.
Yeah.
And in order to have the public have, confidence in getting on an airplane and have it be a robust industry, regulators, had a vested interest in kind of making it safer and making it obviously safer to the public. And I think that's what the SEC wants to do here. Cryptocurrency is obviously not going away. It is a new market and regulators are trying to figure it out. But the Howey test was really not used. It cited that much. It always came to whether something fell under the regulation of the SEC. Now, I think the SEC sees a little bit of and the Justice Department sees a little bit of a need to expand on that definition and at least get the courts to see if it agrees with what they're saying. And in that aspect, I think this is a big test case for them and the crypto industry in general.
As a part of this being a big test, as you say, for the rest of the crypto industry, we'll get a lot of emails being like, Coinbase has filed an amicus brief in support of Ripple. What's an amicus brief? So
an amicus brief is a friend of the court. They file basically in support of whatever your position is. There's been a number of them with Ripple. And in fact, the whole industry seems to be behind Ripple on this. We had Coinbase recently. We had the Blockchain Association file last week in support. I wouldn't say it's unusual, but you have a lot of people lining up behind Ripple. And that is unusual for an SEC seat. You don't usually see this amount of public engagement and industry engagement. Certainly we have that with limited cases. We had the case where Citibank actually accidentally sent $1 billion to some Revlon creditors.
That was bonkers.
Absolutely bonkers. But in terms of like how those cases are tried, that's the parallel that I draw here.
Right.
In that you had a lot of the industry saying, hey, this could ruin the syndicated loan industry if you force people to do this. But in this aspect, they have not brought criminal charges against Ripple. And many people have asked why. And that's a good indication that this may be something that they want to test the waters to see how far they can get on the civil side or what, the judges will agree with them and maybe eventually get up to an appeals court that could further define what's a security and define if really the Howey test is something that should be applied here, if there's something new. That probably will be the end result of this, is there's going to need to be laws that will define clearly what the industry can do and what it can't do.
Right. Maybe in a future time, we'll be talking about the Ripple test and not just the Howey test.
Sure, exactly. Very good point.
Thank you, Chris. You can find more of Chris Dolmetsch's reporting on the Bloomberg Terminal, on Bloomberg.com, and on Twitter. He's at Chris Dolmetsch. That's ChrisDolmetsh. On the next episode of Bloomberg Crypto, the people who most actively believe in Web3, the venture capitalists, have frequently argued that it's a system designed to benefit and reward creators. Artists, musicians, writers, creatives of all stripes. The reality is, as always, more complicated, especially when it comes to royalty payments. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. Or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. We'll be back tomorrow.